What if I told you that there was an ETF that could triple your gains every single day? Would you be happy? Would you be ecstatic? Yes, you would, but there's only one catch. It can also triple your losses. So, hey everyone, welcome back to my channel. It's Nasdaq Felicia back with another video. Today, we're going to be talking about the ETF. This is a rather famous one, TQQQ or TQQQ. This is a widely known ETF that can triple your gains, but also triple your losses. And we're going to discuss whether this is a worthy investment. What is an ETF exactly? What is the definition of TQQ? What it does, the risks, the pros, the cons, all of that pretty stuff. So before I begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's get into it. And make sure you hit that subscribe button down below for more interesting and nice videos like this. All right, so TQQ over the past 5 years has seen an increase in 1,446.52%. And over the years, it's gone up about 3 times. And it, as like I said before in the introduction of this video, is an ETF. What exactly is an ETF? So an ETF is basically an exchange traded fund full form, and it's like a basket of stocks, bonds, commodities under one ticker symbol. So the Investopedia website's definition is an exchange-traded fund is a basket of securities that trade on an exchange just like a stock does. ETFs can contain all types of investments, including stocks, commodities, or bonds. Some offer US-only holdings, while others are actually international. So ETFs offer low expense ratios and fewer broker commissions than buying the stocks individually does. Now that we know what an ETF is, let's move on to what TQQ actually does. TQQQ. I'll just call it TQQQ for efficiency purposes because it sounds like a tongue twister. All right. So TQQ basically seeks daily investment results before fees and expenses that correspond to 3 times the daily performance of the Nasdaq 100 index. This just means that if the Nasdaq is, for example, 10%, if y'all can see this. So if it's 10% in day 1 change, and if it's 10% on day 2 change, TQQ on day 1 will be 30%, and on day 2, TQQQ will also be 30%. So to reiterate that, on day 1, if NASDAQ is 10%, TQQQ will be 30%. Same thing on day 2, but if we were to calculate cumulative change, we would have to add 0.5% to each of the NASDAQ gains. In total, we're going to add 1% to that because of pre-market movements. And the cumulative change in NASDAQ would be 21% then after day 1 and day 2. And in contrast, TQQQ would be 69%. This just shows the triple gains of TQQQ. And that's one of the advantages that we'll get to later in the pros and cons and risk section. And it actually is a leveraged ETF. And let's just see how it gets that, how it manages to get so many gains and triple times. So among leveraged ETFs, PowerShares ProShare Ultra Pro, that's its real name, is PowerShare ProShare Ultra Pro. If I'm saying that right, sorry, never mind. It's ProShares Ultra Pro QQQ. Okay, how exactly does it get triple gains? It's basically a leveraged ETF, which means it uses debts to gain leverage. And That's how it just offers like a high return on that. And it also has an expense ratio of 0.95%, which is a bit higher, but it's pretty decent for the return you're getting. So next, let's discuss the pros of TQQQ. I'm going to share my screen again so you guys can see this. So according to Forbes Advisor, over the 10 years ending July 31st, 2020, TQQQ returned an average of 51.5% annually, making it the single best performing mutual fund or ETF over that time span. As I said before, the average return is totally worth it considering with the expense ratio, the higher one, it's still worth it to get that. And it's making it the single best performing mutual fund or ETF over that time span. Also, among leveraged ETFs, it's one of the largest with assets under management of $4.31 billion at the end of the fourth quarter. And TQQQ is also one of the more heavily traded leveraged ETFs in the US with an average daily volume of about 36.98 million shares. Now, I think the most important pro about this is its high performance. I'm going to keep reiterating the high performance because I find this very fascinating. So since TQQQ is a 3 times leveraged ETF tracking the NASDAQ 100 index, investors can potentially receive returns that are 3 times of the index minus expenses. And another thing that I find really cool about this ETF in the pro section is the limit orders, because leverage funds can actually produce large short-term gains, as we've seen before, but they can also produce large short-term losses. And since ETFs can be traded during the day like stocks, they're very similar to stocks and other commodities, investors can place limit orders to sell at a specific price or the price that they wanted to sell, which can limit extreme losses. So then they're allowed to wait till they want to sell, which is a good advantage. So let's look at the cons. So I'm going to go back to our Forbes article here in just a minute. And while we're waiting, please hit the subscribe button. It would really help me out a lot. I'm on the road to 1,000 subscribers. And I would really, really appreciate that if you would hit that red subscribe button. So keep in mind that during the vast majority of that time period over the 10 years ending July 31st, 2020, the US was in an unprecedented bull market, and tech stocks in particular were doing exceptionally well. And to reiterate, this is both independent situations that will lead TQQQ to do well. This superior performance was also associated with substantial lows during this time period at the same time, because not every period is perfect. And so at the peak of the coronavirus impact on the stock market in March 2020, for instance, actually, TQQQ fell almost 70% from recent highs. And if we compare it to another ETF like QQQ, it only experienced lows of only about 27%. And let's look at its graph, like its chart. I don't know why I call it a graph, but let's just look at the chart. So in March, let's go to March. Okay, in March, it lost over 80% of its gains. It used to be in 2019, it used to be around $30, $40. And at the end, in February, is about $57. But it lost over 80% by returning to about $13 to $17 in there. Meanwhile, QQQ, the regular QQQ, only lost 27%. All right, next. So next, Investors and traders that do not consider themselves active and risk tolerant should issue leverage ETFs. This is according to ProShares actually, and this is taken via Investopedia. So what ProShares basically is saying that they're the largest issue of leverage ETFs, by the way. And they're saying that leverage ETFs come with additional risks and nuances not found in traditional ETFs. And they quote, I'm going to quote them, okay? Due to the compounding of daily returns, ProShares returns over periods other than one day will likely differ in amount and possibly direction from the target return for the same period. These effects may be more pronounced in funds with larger or inverse multiples and in funds with volatile benchmarks. So finally, the risk. Another risk is that leverage funds like TQQQ can seem extreme swings in prices. It can go up and then crash down a minute later. I'm exaggerating, but it's not going to be a minute later. It will be likely a day or two later. It's very swingy as we've seen in the graph. And this makes, in my opinion, this ETF too risky for investors who have a low tolerance for volatility because they'll want to immediately sell. So if that's you, if that would be me in my place, I wouldn't do that. But this is not financial advice. Please do your own research. And coming back to the expense ratio again, most ETFs actually have an expense ratio of below 0.2%. But TQQ is like 0.95% or $95 for every $10,000 invested. To put that in perspective, that is actually just to take care of the intricate trading systems that TQQQ and other ETFs like this have. So higher expenses reduce the total return to the investor more than comparable funds with lower expenses. So in conclusion, I think that TQQQ is appropriate for investors who want like a large cap growth stock ETF that can potentially outperform the S&P in the long run. That's for like TQQ's sister, QQQ, and for me, I feel like TQQQ, the TQQQ, is appropriate for investors with high tolerance for risk. This is my opinion, not financial advice. So in the long run, I feel like TQQQ is appropriate for investors who like risk and they can tolerate it. And for short-term investment periods, it makes a good swing because the main thing that set me off is if we go back and look at the graph, we can see how swingy it is. Swingy. Yeah, it's like very volatile. So we can see like the numerous bumps, and over the course of a year, you can see how volatile it is. It just keeps going up, down, up, down, up, down. And if we see like another stock, just any other stock, like Apple stock, we can see over the past year, it's not as dramatic as TQQQ, but eventually it will go up. But I think that I will just use this for a short-term trade to make like cash on the side. So thank you guys for watching this video. I hope you enjoyed this video. If you found this information helpful, please be sure to like, comment, and subscribe. If you made it till the end, please comment powder puff down in the comments below so I know that you're here with me right now. Thank you guys so much and see you on the moon. Bye-bye.